just so everybody is on the same page. So hi guys, I'm Shonda, as you guys know. Today I wanted to come before you guys to talk about all of the things that's changing within the credit industry. I have been in this industry for just about 10 years next month. I have been in this credit industry. And over the course of time, over the course of 10 years, of course, there has been changes within our credit score, changes in how things are graded, changes in how disputes work and credit scores are calculated, and all of that, right? Like we have pretty much seen it all. However, I would say that like what's happening right now, or what has already happened, let me be clear, what has already happened is monumental in the sense that it does affect the standard behavior of credit going forward. It affects how lenders view our credit report, what they are able to see, what we can control, and also the things that we need to be aware of as consumers. Now, I have seen a few comments that are sort of looking at it, framing it from all negative, right? Like it's easy to be like, oh, they are moving the goalposts, or things are changing. Right when we caught up, they're trying to make it harder for us to get credit and all of that. One thing that I would like to offer, I would say, is you have to understand lenders, banks, they make their money from us. So if we do not qualify for their products, then they don't make money. So it's not the lender's goal necessarily to unqualify 95% of the population. That will not do their bottom dollar any good, right? And so, but obviously it's not all good either, because of course they're greedy, and they constantly are searching for ways to either tack us with higher interest rates and just things of that nature. So yes, I can understand where you're coming from, but it is not all bad. I promise you, it's not all bad. If you are on TikTok, if you go on YouTube, I'll be showing what I'm talking about visually, and you'll be able to see. All right, so we are going to discuss 4 main topics today. And let me pull it up. All right, so the goal for these lives, by the way, the goal for these lives is to get everyone prepared for 2026. Okay. It'll be it's pretty much like a 4-part series that we'll be doing starting today. So today's part 1, and then we'll be doing 4 parts to prepare everyone for 2026. Different, and each week we'll focus on different areas of our credit profile that we need to focus on, improve, changes that we need to make before 2026. Obviously, we're keeping in mind how our new credit scores are measured, are graded, are allotted, and also how lenders are viewing those changes. Okay, so the whole again goal of of these lives are so that we are all prepared, especially if you are in the Credit Academy community. You guys will starting tomorrow, actually, you guys will start to see daily to-do list, sort of say that I want you guys to like focus on, and you guys will be able to download the guides and stuff like that. Okay, but I wanted to kick it off with this live just discussing 4 main things that has changed when it has come to our credit. Okay, so for anyone who is not aware, you're just not aware of what's going on in the credit industry. Let me sort of like give you guys a quick recap of what's going on. All right, so the main 4 parts that we're going to talk about today is number 1, FICO 10T. We've discussed that ad nauseum a lot of times on this channel. So if you want a full detailed breakdown of FICO 10T, all of the changes and all of that, you can go and view the past video that I made about that, because I'm not going to go into detail about it today. But just to kind of give you guys a brief overview, we will go into that. And then we're going to discuss how banks are monitoring cash flow now, and what part that plays in our credit profiles, our credit approvals, all of that. That one, I'll just wait till I get there, because I have some opinions and thoughts on that one for sure. And then we're going to talk about how buy now, pay later accounts are now reporting to the credit bureaus. This should not come as a surprise to anyone, especially if you're in here. It shouldn't come as a surprise, because we've talked about this so much, and I warned you guys about this because I saw it coming. Last year specifically, I started to see companies putting in requests and caving to the buy now, pay later accounts. But we'll talk about it, and then we'll discuss like how to set yourself up over the course of the next 12 months. Okay. So those are our main things that we need to discuss today. Again, I know everybody got kids and they get out of school at 3. So the goal is to be done by 3. Okay. All All right, so number one, let's talk about FICO 10T. Again, I went into detail in another video, but just a brief overview. FICO 10T is the latest version of our credit scores, right? So if you guys have logged into any credit monitoring app, you likely have seen your FICO 8 score. You've been seeing your FICO 8 score probably since maybe 14 years now. You know, for some of us, it's the only score that we're used to dealing with. It's the main score that lenders are pulling. We know that it's like it's what's considered like the classic standard FICO score, right? Now, the difference with FICO 8 and FICO 10T is static versus trending. Static versus trending. What does that mean? Static data versus trended data. So under FICO 8, which I'm just going to refer to just to keep it easy, I'm going to refer to that as the classic score. Okay, classic credit scoring. And then the FICO 10T is the new score, just so everybody's caught up. All right. So our classic scoring system when it comes to our credit report, if you apply for a credit card today, a lender will only be able to see a static view of your credit report and all of your accounts. And so what that means is, let's say you have a credit card that's currently reporting at 10% utilization. You've been doing really good with your utilization, and you decided to apply for a credit card. You apply, a lender pulls your report. The report that they pull is a classic score, is FICO 8. And so they'll see what your utilization is on the day that you applied. They'll see if you've how many times you've missed payments within the last 24 months. They'll also see your current balance as of the day that they pulled your report. That is considered like a static report. Okay, think of it as like a screenshot where it's still in time. The information is not ongoing, it does not change. It's whatever day you apply, that information is sent to the lenders, and that is all they see. Okay. Okay. Now, when it comes to FICO 10T, which is our newest scores, if you apply for that same credit card today, a lender will not only see your static report, they will see your trended data over the course of the last 24 months. And the difference with static and trended is, not only are they going to see your balances as of today, your utilization that you're reporting as of today, they're also going to see every single utilization you've reported over the past 24 months. They will also see your debt ratio. Are you trending downward in terms of the amount of debt that you have, or are you consistently trending upward? Are you accumulating more debt and paying off for example, only utilizing minimal payments? And then there's this new thing that they're calculating. Which is number one, they're assigning behavior classifications to like our behavior when it comes to our credit cards. We'll get into it. And then another thing that they're doing is they're monitoring how likely or how close or far removed are you from financial devastation, rough times, rough patches. And we'll talk about like how they're grading that. Okay. Yeah. Yeah. They see all of that. Um, this is credit scoring, the new credit scoring model. So it's not necessarily tied to a single institution. What happens is when a lender pulls your report, they'll choose which FICO score they'll want to pull. Most of them will be pulling 10T because it gives the lender more data. It's extremely lender friendly. I should have started with that. FICO 10T is extremely lender friendly. If you're wondering why we go from FICO 8 to FICO 10T and we just skipped right past 9, I'll let you know. FICO 9 lenders hate it. Lenders did not like FICO 9 because FICO 9 was more consumer friendly. It was more forgiving when it came to collections. It was more forgiving when it came to medical collections. Therefore, the score that it would give lenders, it would be more favorable on us, right? Lenders could not stand that. They did not like FICO 9. Therefore, FICO 10, and this part is my opinion, but FICO 10 is like a response to the failure of FICO 9. They've been trying to push FICO 9 for like 8 years, literally. FICO 10T is a response to the lack of lender support of FICO 9. And what they did was, in my opinion, they overcorrected. So now, as opposed to being consumer friendly, they have went way far on the other side, and now they're super lender friendly, meaning they're giving lenders way more information than they ever could have gotten, was qualified to see on our credit reports with one pull. Every time, this is just a quick caveat. and this is referring to under the classic credit scoring models, right? A lender pull your report, they get your static report. In order to see what you're doing months down the line, they have to pay to pull your report again. Some companies, depending on how big they are, they'll do things like quarterly reviews or yearly reviews to pull a new copy of your credit report, right? But they got to pay for that every single time. No, no, no. With FICO 10T, they don't, like, they get all of it. It's literally like the difference between a snapshot and, I mean, a screenshot and a full movie, right? Does that make sense? Can you guys see the difference between a static report and a trended data report? And if you guys are still confused, again, I do have a full detailed video on the differences between FICO 10T, all of the changes that's within that particular credit scoring model, and how that affects you. All right, because I didn't want to go really too into detail on today's live because we have other things to discuss. Okay. Who is all involved in approving these credit models? Oh, I don't know the specific individuals, but FICO is a giant company, of course, and they're considered the only notable suppliers of our credit scores. So I don't know who decides on their panel or their board, but they decided, and it's out. And also, FICO 10T has been approved for mortgage lending. FICO 10T has been approved for mortgage lending, so that means it started this year, but next year is really going to be rampant. Every mortgage application will have to be qualified based on FICO 10T and not FICO 2, 4, and 5 anymore. So yeah, it's getting crazy. They're going to be looking at, so trended data will allow them to see, are things getting worse? Are they getting better for you? And let me show you guys how that looks. Let me pull up a screenshot. And if you're on TikTok, you'll have to come to YouTube to see what we're showing. Let me make sure you guys can see it. All right, let me get out y'all way. All right. Can you guys see that? So this is the side-by-side comparison. I wish I could move. Hold on. I can move. Okay, perfect. All right. So okay. So look, this is the difference. And let's say I'm a lender. Suppose I am a lender. I have this credit card that you want to apply for. Okay, we're going to do two simulations. One, what they see on based on the classic, or we'll just say old scores, versus everything that they see today. And you guys, this is so accurate that it's shocking how much they're privy to. Oh, I got to go back to the screen in order to do. Okay, so let's walk through the differences. YouTube, Shonda Martin. All right. So let's just say you have a $10,000 credit limit on your credit card. Okay. And your current balance on that credit card is $3,000. So that means that you have only about $7,000 remaining that you're able to spend. And also that means that your utilization is currently 30% because you've spent 3,000 of the 10,000. Okay. Now you've been on time and you've had this credit card for 3 years. You want to apply for a credit limit increase. Okay. Shout out to whoever just sent that. You want to apply for a credit limit increase at my bank. So what you do is you apply. And here is what I'll see based on FICO 8, which is our old score. I will see, obviously, hold on, I'm trying to wait till this thing stops. Okay. I will obviously see, shout out to y'all, thank you. I will see what account it is. I'll see the credit limit. I'll see your current balance as of today, like the day that you apply. I'll see that you have $3,000 on this credit card. And I'll also see that your utilization is 30%. I'll see that you're current. So I show that you've made payments, all your payments on time over the course of the last 24 months. So that would tell me that you are a responsible borrower to some extent. And I can count on you to pay your bill, right? I can see that. 30%, as I always tell you guys, 30% is the safe zone. It's not the most optimal range, but it is safe. So if I'm a lender, I'm not going to be too mad at 30%. I'm not going to give you the best offer for sure, but I'll give you a little something, right? And so this is all I will see. If you guys can see this, the part where it says static reporting, this is all a lender would see based on our old score. Okay. So a lender would view that and they'll say, hey, this customer has 30% utilization, they pay on time. Again, it's acceptable. The utilization is higher than I would like. However, they do qualify for a minimal credit limit increase. They do qualify for a minimal credit limit increase, right? You'll notice that that's all that's to it. That's all they'll see. Okay. But let's go to the present and in future and what they will now see versus the static reporting. So with trended reporting, oh Jesus, look at how much information they'll see. And this is accurate to literally how lenders will see when you apply for your credit limit increase or even just applying for a credit account. So again, you'll see all the basics, the account name, the credit limit, the current balance, the utilization. You'll see the payment status, and then you'll see the account age. That's standard procedure. But if you'll notice, there's also additional information, right? So number one, under current balance, it says the balance is $3,000. It then shows them that within the last 24 months, your peak on this card was 8,500. So that would mean that right now, currently, it is showing that you've paid this card down recently within the last 24 months because it was at 8,500, but now it's at 3,000. So that's good, right? Well, if I'm a lender, I'm going to look at that with favorable eyes. I'm gonna say, okay, so it looks like they have not negated their debt. They haven't given up on it completely. They are trying to make an effort to pay it, right? But then um we scroll down and whew, Jesus, this is where it gets insane. So remember I told you guys that trended data was giving them a movie to see how that account has behaved over the last 24 months, right? This is exactly what I mean. So if you look at the months, each month you'll see the balance that the card was at, and obviously the utilization, and then you will see the payments that were made. Okay. So we can see in January of 2024, the balance on this card was $4,000, right? And then this person made a payment and then you made a payment for $350. I'm going to assign you a credit line behavior indicator. They call it like CDBI or something like that. But anyways, I'm gonna assign you a behavior indicator. What does that mean? So as you can see, in January, you were considered a revolver. We'll talk about what these things mean in a second. Then you'll see in July, the balance surpassed $8,000. So it took your utilization from what it was 40% in January to now 80% in July. And we're showing that your payments are also starting to decrease. So you used to make $350 payments on this account, but now I'm only seeing that you're paying $150 despite the balance being way higher than it was. So now I'm really looking like, okay, what is going on with you financially? I'm gonna still consider you a revolver. Remember that, revolver, okay? Because they've coined new phrases on us, guys. I'm gonna get y'all question in just a second. Let me finish explaining this. Okay. So not all is bad because by September, I show that you are improving. So you were at $8,500, but I see that you doubled or tripled almost your typical payment from $150 to $500, and now you're at $8,200. Then you started to trend downwards, and now you got the balance to $7,800 to $7,000, and then now $3,000. So again, obviously there is a downward trend in terms of you paying off this card. So overall, and by the way, I didn't mention this, but I don't know if this is not common sense, but these two reports that I'm showing you, these are the exact same account. There's no variation differences between the account status, the pay down behavior, or anything. The only difference is what lenders are able to see. Do you understand? So let's keep going. So you've removed from a revolver status to an improving status. And again, we'll talk about what that meant. And then as you can see, by December 2024, you went from improving status to what we consider a major pay down status. And because as you can see, you took the car from $7,000 to $3,000. So that's 70% utilization to 30% utilization. That is a big leap, right? And then you were determined to be stable. Okay. So keep this in mind. Keep this in mind. Let me go back to the thing. I gotta, okay. So keep what I just showed you in mind. So again, they now assign you these behavior cues, these behavior cues every single month, right? So that 24 months view that they're able to see, they assign you a behavior cue every single month. It's 4 behavior cues that I was able to spot in researching this. These are the only 4 that they have publicly available. But this is what it means. So if you are considered a revolver, if your account rather is considered a revolver for most of those months, that means that you are a person that carries balances. You are a person that pays down less, that pays less than 70% of your old balance. And so basically that means that you are higher risk. In all and so did I can y'all can y'all hear me? It like clicked or it did it just ooh. Oh, okay. My bad. I thought it clicked. I thought it ended because it like refreshed. All right. Where was I at? Oh, I know where I was at. So the behavior cues, because those are important and those are what's honestly determining what the lender is approving you for. They're literally determining what the lender is approving you for. So, anyways, back. I'll just start from the first one because I think that's where I was at. Um, so these behavior cues that you are assigned every single month now, and keep in mind, this is all credit scores. So this is not just for a credit card. This is not just for a specific company. This is literally our credit score and how it is graded now in general. Okay. In general. Okay. So yeah. So a revolver means that you typically carry balances. You pay interest to the bank, meaning you don't satisfy your full statement balance as a result of whatever payment that you have paid. You are not going to pay back your full balances. You are going to carry a high balance and you're going to pay some interest. So you're going to be considered a revolver in the eyes of the bank. Okay. In the eyes of credit. And then, or you can be what they consider a transactor. A transactor is like the most optimal rating, which is considered a person that pays in full. So if let's say we had a credit limit for $10,000, you pay a few bills with it, you used it as much as you wanted to, and perhaps you racked up about 10K. You spent the full line, right? Like you maxed out your credit card. However, before that month was over, before that billing period was over, you satisfied your balance. You paid your full statement balance. So you're going to get a thumbs up, obviously, from the lender, from the bank, because you're considered a transactor. These are going to be the account types that qualify for the most optimal rates, the most optimal credit limits, the most optimal term agreements, right? So because you are a person that they can count on to pay back your credit card, you are a person that obviously there does not appear to be any financial stress as per indicators on your credit report, and they don't have to worry about you perhaps not having to or not being able to pay back their card based on your past, based on the last 24 months. You are considered a transactor. And then you have what we call a recovery. This started 2 months ago, but it's really going to take effect next year. So just it's here now. It's here now. That's honestly the best way to the easiest way to say it's here now. All right. So if you get the recovery indicator or recovering indicator, that just means that you've had a big pay down within the last 90 days. A big pay down is considered anytime you have reduced your utilization more than 20%. So if you went from 70% to 50%, you're going to be considered a recovery or pay down. They all different companies will give it different names, but it all means the same thing, which is your account is recovering. Okay. And that is considered to be a positive in the eyes of lenders. Obviously, they can see that you are making a active effort to pay down your credit cards, even if you were at 90% and now you're at 70%. Yes, 70% is still high, but they do credit you for making that big pay down, right? So your account is in recovery. Are you going to qualify for the best rates? No. Are you going to be completely disqualified from a credit limit increase? Most likely not, depending on, if there are other factors that's affecting it. If you're just like missing payments out the wazoo on other accounts and stuff like that, then perhaps. But overall, you aren't fully disqualified for a credit limit increase. You typically will get like the minimal available credit limit increase. So if the credit line is like $10,000, and let's say you're trying to get like a $20,000 credit card, then no, they'll likely either deny it or counter offer you, perhaps will give you 1,500 more, right? Whereas if you were a transactor, then you likely could have qualified to double your line. You get the difference. So no, you won't get flat out denied, but you definitely will not get what you could have gotten. And this is irregardless of score. I want to make that clear, because the whole point, and I did not say this, but let me just sort of wrap it up in a blanket with this. The whole point of the FICO 10T, even more than it has ever been, your credit score is quite literally the least determining factor of your credit lines going forward. Yes, they see your credit score, but lenders do not care about your credit score. I mean, I've been telling you guys that, and we've been known that they don't care about our credit scores, but like now it's literally built into how our credit scores are calculated, which is insane. You would think it's paradoxical, but it works for lenders. So I don't know. Anyways, the worst status that you can be in is a deteriorating status. So that just means that you are extremely risky. You probably have missed payments most likely, or you're above the credit limit. So if you have a $10,000 credit card, you didn't spend $12,000 and haven't paid your bank back. So your account is considered in deterioration. We do not expect you to pay it back. Nothing that you apply for right now is going to get approved, because you are you are showing major risk, major red flags, major red sign. We don't trust you right now. We do not trust you right now. Okay. So back to dang, why doesn't it just stay up? Okay. All right, back to our example. So every month you'll be assigned this. And so how it works is, again, not only do they see the balances that you had that month, the utilization that you was reporting, but also like your payments. This is how a lender would grade the exact same application that we graded with FICO 8. This is how they'll grade the exact same application. This is what they'll say. They would say this customer has experienced significant financial stress, right? Because the card peaked at 85% utilization in August, but they have demonstrated exceptional recovery. The 4,200 December payment shows, because as you can see in December, it shows that you made a payment of 4,200. That's when you went from 70% to 30%. That's when you started to trend back upwards in terms of like managing this account. So they'll credit you for that. They'll say the $4,200 December pay down shows strong commitment and likely improved circumstances, right? Like that's very clear. And there's a positive trajectory on the account. So we can see that you went from 85% to 30%. However, your current 30%, it does qualify you for a minimal credit limit increase, but you don't get a substantial increase. And in order to be considered a transactor or in the most optimal status, you will need to maintain under a 10% for at least 4 months consecutively. I'm going to offer, I mean, I'm going to state that you should just aim to just do it on a regular basis, because obviously we see that they're seeing every month now. Because here's the thing, and I have also discussed this with you guys, done this with you guys, recommended for you guys to do this, but it just no longer works anymore. You know how I always say, guys, don't just randomly apply for things. Like you need to know what you're going to apply for at least a month in advance, so you can prepare your credit profile, so you can pay down your utilization to ideally between 1% and 3%, so you can get that boost, that last minute boost in your credit score, and be in the most optimal range when it comes to lenders, right? I told you guys that for years, and I've also followed that myself for years. The thing is, we cannot do that anymore. That's not available anymore, because again, they can see that that 1 to 3% that you reported this month was not so in all of the months prior, right? So we no longer have the luxury of cleaning up some stuff at the last minute, you know? And the scary part about this is not only are they going to see the account, like, so if I'm in the bank and this is my credit card that you have through me, yes, of course, I already have this information. So I'm not only seeing the information from this account, I'm seeing this much information on all of the accounts on your credit report. On all of the accounts on your credit report. So it's not just this account. I'm seeing this for every account, right? And I'm going to use that information to determine not only what you've done for the last 24 months, but what I can expect you to do over the next 24 months. So I'm going to use your past, the last 2 years of your past, to determine what you're going to do in the future. What you're going to do in the future. So the key differences, obviously, for lenders is they get way more data depth. Like they no longer only get to see your current statuses, what you're currently doing on your credit reports, and completely in completely in the dark of what you've done for the last 24 months. No longer is those days. Okay. They can do what's called a trend analysis, and we'll talk about that in a little bit. Meaning, like I just said, they take your past to determine what you're going to do in your future. They do what's called predictive lending, right? Giving you predictive scores, which is a fancy word for I'm going to literally use your past against you and to determine your future. Okay, that's just what it is. Also, they get way more utilization context. So instead of just seeing 30% utilization, no, baby. They get to see the trend of your utilization, whether that was in a decline or an incline, at a decline or an incline. And also your payments. Your payments. And well, let me save that for that. And again, they get to see your payment patterns. Are you typically a person that pays minimal balances, like just the minimum due on your credit card? What percentage of your balance do you typically pay? We'll discuss that more in detail next week, because that can honestly be a whole segment on its own, and I don't want to get too deep into these payment patterns that they have unveiled. Oh goodness, Jesus, we'll talk about that next week. But anyways, they have a more accurate prediction of like your risk assessment and hitting risk detection. So like again, they're able to determine all types of stuff based on the information that they're privy to. Right. And as you guys know, this is nothing new. This is definitely nothing new. The most optimal range is always going to be under 10%. We know that in terms of your utilization. They only see your utilization based on your statement balance, by the way, your statement balance. So on your statement date, whatever balance is due, or I'm sorry, whatever balance is reported on your statement date, that's what they use to determine your utilization. So they're not having a eye on everything that you're doing throughout the month, how many times you are transacting, like your daily reports and all of that. They don't see that. They're not privy to that still. So you do still have some control over this. Keep in mind, you do still have some control. Your balances only matter one day a month, which is your statement date. So more than ever before, if you have not already been very tuned into what your statement is, or when your statement date is on each of your credit cards, you absolutely need to get that concrete. You need to know that there is no excuse why everyone should not know their statement dates on their credit cards. It's different from your due date. Your due date, the balance on your due date does not affect your credit score. It's the balance on your statement date. It is so important. The statement date is just the last day of your billing cycle. Okay. So make sure come your statement date for each credit card, your balances, try as best as you can to get your balances under 10%. It is way more important than ever. And I will say those who have already implemented this rule, this under 10% rule, then you're going to benefit. Your FICO 10T is going to benefit from that practice that we've been doing since I don't even since the beginning of time, honestly, in here, like in Credit Academy and Road to 750, like it's always been 1 to 10% is the goal, is the goal. If you have been following that, then you will be pleased with your FICO 10T score, because it definitely should have increased. Your applications should have seen, but especially next year, you should see a difference. Your hard work will pay off, because it will show and it will benefit you. It will benefit you. Um, between utilization between 10 and 30%, that's still considered the safe zone. That's like, you know what I'm saying? Like, it's not the best, it's not the worst, but it's sort of like just in that middle ground where, to keep it frank with you, if you already have great credit and all the credit limits you want, and um everything, you know, your credit has served you and you're fine with your credit not growing, then you reporting in the safe zone is fine because your credit will be stagnant, right? So if you cool with your credit and how everything is, and you don't want to change anything, then you can stay in that safe zone. That's, you know, that's fine, right? Because your score will not move, it will be stagnant. You'll get a few points here and there, but your score is not going to do any big changes if you are operating in that safe zone. It's just not how credit works, right? However, if you are a person that wants to improve your credit score, if you don't have at least a 750, then you have a ton of room and space and points opportunities to gain. Therefore, you need to aim for under 10%, right? But if you want your credit score to decrease, right, then continue to report over 30%. Over 30% is high risk. Always has been. Way more now though, because like we just went over, because of all of the information we just went over, all the information that they are privy to now, it will hurt you even more. It will hurt you even more. Um, Wait. Okay. So they have these new behavior classifications every month. And here is just a static view sort of what we just went over, the differences between FICO 8 and then FICO 10T in terms of the information that they see. There's just a screenshotable version, right? It's everything that we just went over. Now let's talk about the next biggest change on credit reports. Okay, let's talk about the next biggest change. So I'm sure you guys all know what plaid is, right? Is everyone familiar with what plaid is? What about closed accounts? They still see it. Yeah, they still see it. Okay, so if you're not familiar, I have a picture on the screen. I'm sure everybody has ran into this. Like, for example, let's say you shopping around online. Maybe you applying for something. I don't know, child. Whatever you're doing online, and you get this pop up, this lovely pop up where it says like connect your bank account via Plaid. Plaid is just like an API that companies will use in order to connect to your bank account to see, you know, depending on what you're applying for, to see different things, to see your balances and to make automatic payments. Sometimes I even use it on my one of my utilities. Like one of my utilities, I'm able to pay through Plaid, right? Yeah, you guys have I was going to say you guys have likely all seen this. Okay. Why are they important? What am I bringing your attention to Plaid for? Yeah, I connected using Rocket Money. Me too. I have Rocket Money and I also connect with Plaid. Again, it's just a software, it's just an API that companies will use in order to connect directly to your bank account so you can either do automatic payments or withdrawals or whatever the case may be. Okay. Now, why are they important and why are we discussing them? So with this new all these changes with our credit reports and in the spirit of giving lenders more information on us as consumers, um Plaid is super important because now let me rewind it back because I was like, I don't know where to start. I have so much to say about this, but I'm trying to minimize it because we have what, like 30 minutes. Okay. So the first thing I'll say is this. Last year, this is something that I started to notice that was number one, just started to be available more, right? Like at first it was sort of like every few apps, or maybe you run into it one or two times. But then if you'll notice, people who shop online or conduct business or pay bills and stuff like that online, you probably have noticed an uptick of companies using this service. Or in honestly, Plaid is just the most notable name, but there are other APIs and other companies that banks use. But I'm just using Plaid to represent all of them and not necessarily just them. Okay. The point is this: they are the biggest company that does this. But so I started to notice an uptick of websites promoting this Plaid thing or wanting you to connect to it and promoting it to be just seamless and fast and easier for the consumer and stuff like that. And I've used it multiple times, right? But I started to notice this uptick. And then one of the things that sort of struck me as odd, specifically last year when I started to kind of pay more attention to them, is what was it? I forgot what app I was using. But anyways, the point is they were sued. Plaid was sued by a consumer, I'm assuming, just a regular person. Plaid was sued by a regular person, and the reason that they were sued for was very weird to me, because the reason was, and I wanted to pull it up, but I don't remember the name. But anyways, the reason in so many words was Plaid was used to determine some sort of credit decision, and because of Plaid, the person, this lady, she was denied for, I don't know if it was a home. I don't know what she was applying for. But the point being is, I remember seeing that lawsuit because keep in mind, I always am searching for credit bureau lawsuits or just credit transaction lawsuits or furniture lawsuits. I'm constantly looking at that and keeping my eye on it. So when I saw Plaid pop up, at first it wasn't weird because obviously companies get sued every day. That wasn't weird at all. But the reason that they were sued really was like odd to me, because I'm like, how the lady was framing it was like they used the company, the bank or whatever, they used Plaid, the information that they received via Plaid, in order to make a decision about her credit, and they did not tell her. So, and she stated rather that her credit report was not used, right? But the information that her bank account was, the information that Plaid provided to the bank, or yeah, to the lender, is what was used to determine it, and her credit report was not. And she was stating that it was just unfair practices, right? And that was really interesting to me. Plaid ended up settling with her. So that really was a red flag, because child, most of the times when companies settle, oh, it's something there. It is something there, and they don't want you to look into it. But I didn't say anything, and I didn't have anything else to back up my suspicion at that time. But then I was like, you know what, let me just continue to watch them. Oh baby. And then when I knew it was done for, when I knew I was already late to the party, was when I saw, let me pull it up actually. When I saw that Plaid was coming out with their own hold on. With their own credit score, or prediction score is what they say. Prediction score. So when they came, when they said that, I was like, oh, that's why. Here we go. Wait, let me pull it up. Here we go. I gotta share my screen again. This was their fall 2025 product release. Awesome. Okay. So they unveiled something. This was 2 months ago or so. But anyway, so they unveiled something. They teased it last year. But basically they say, "Oh, okay guys, we're going to come out with what we call a trend score, or a lens score. And this is a credit risk score. So they've been able to surpass the qualifications of being considered a credit bureau, credit reporting agency, right? Because they don't provide a credit score, they provide a credit risk score. This is the same thing that LexisNexis does, but that's how they kind of get around to it. But anyways, they came out with their own lending score, and it's a credit risk score. And you can read what they officially are explaining it as, which is just traditional. They say traditional credit scores still matter, but they miss what's happening in a borrower's financial life. Lens score looks at real-time cash flow, income patterns, and most importantly, account activity across the Plaid network to understand how a borrower is managing their finances and spot risk behaviors that could impact their ability to repay. Our first model, LS1, built on top of hundreds of attributes, predicts 12-month default risk and delivers a 25% lift in predictive performance compared to traditional credit data alone, right? Right. So I just wanted to show you guys, because, and mind you, this is their appeal to getting lenders to purchase their product. So this is not for us consumers. They don't care about that. But just so you can see how they sell your information, right? And so the point that I'm trying to make is this. Plaid has Plaid has inserted itself into our regular consumer actions online in terms of like paying our bills, like just doing things that's not related to credit. I literally have it again signed up or connected to my utility company just to pay my bill automatically, right? And so they've inserted themselves into our bank accounts, gotten full permission, and I'm sure that terms of agreement and in terms of service, I'm sure it gives them the legal right to do this. So I'm not saying that they're doing anything illegal, right? What I am saying is obviously they are not promoting themselves to us as consumers that way. So we are not aware that they're doing this. But so what they're doing is now that they are connected to probably multiple of our bank accounts, if you're like me, they literally were connected to multiple of my bank accounts. And when a lender, if I apply for a credit card or whatever I apply for, right, a lender can look to see if Plaid has a lending score on me or a risk score on me, and they can purchase that information from Plaid. Plaid, I don't know if it's Plaid or Plaid, so I'm just gonna say Plaid. They'll purchase that information from Plaid, and what they get in addition to my credit report, right? So lenders only used to care about your credit report, the accounts that were on your credit reports. They don't know how much money you have in your bank account, all of that, right? Now they're able to see real time cash flow. Now instead of our credit score being the determining factor, or even our credit profile being the determining factor on if we're going to be approved for credit or not, banks are pushing towards bank account monitoring. Bank account monitoring. And it's not us giving the lender permission to do this, right? Like this is us thinking that we're signing up for a service that was unrelated to this application, not knowing that on the back end, Plaid is selling this information to our lenders, and they can legally do this, right? Sell it to our lenders so that not only is our credit report going to determine if we're going to get approved, but now they're literally doing real-time bank monitoring. So what are they looking for? Or what are they seeing? What are they seeing? Well, we know what they're seeing because now that they have unveiled this amazing product and it's out now, by the way, like I said, I was late. I should have said something last year, but I wasn't sure and I didn't want to get sued. Child. Y'all know that the run in I had with LexisNexis, so I ain't got time. Okay. Because they hate when they're exposed. They hate when they're exposed. And I'm still gonna always say it, but I just have to have concrete proof, right? Um, so yeah, it's already here now. But what are they seeing? Okay, so in addition to our credit report and all that we just talked about in terms of our accounts and all of that, they also now lenders are able to see our account balance for the last 24 months. I don't even know how long, honestly. I don't know. I think it's 24 months. I'm just gonna say 24 months for the last 24 months. So how many times have you went negative? Has your account went negative? Do you have any accounts connected to Plaid that has uh went negative within the last 24 months? If you do, your risk score, your lending score with Plaid is going to be bad. And it doesn't matter what your balance is right now, they're going to send that to your lenders. They get to see your income deposits. Mind you, this is all stuff that's not on our credit report. This is all stuff that's not on our freaking credit report, y'all. This is happening now. It just unveiled last month. So you can expect for it to really take hold next year. So all of this that we're talking about is to prepare you guys for next year. And why am I bringing this to your attention other than obviously to vent to you guys because this is ridiculous, but also so that you can know this and do something about it. Because in addition to that, they're going to see your payment history. They looking at how you pay your bills. Do you pay your utility bills on the same day every month? Are you consistent when it comes to that? How what's the money in versus money out ratio in your bank account? So now they have a full view of your financial life. It's not just your credit. Again, it's not, they don't just see your credit now. Now they can see everything going on with you financially and then use that to determine if you qualify for this car or for this credit card. Are you living paycheck to paycheck? Yo, I meant to say that. I should have kept these links. Next time I go live, I'm gonna do better with keeping the links of my research. I'm just gonna compile it all in documents so I can go through it with you guys instead of just focusing on the presentation because that don't matter. So one of the things that's so interesting, they have what's called within the Plaid risk score, they have what's called a paycheck to paycheck indicator, guys. Paycheck to paycheck indicator. Obviously, you understand what it means, but specifically, they assign you an indicator or they assign you an indicator based on how often you go paycheck to paycheck. If you get paid every 2 weeks, your last deposit was 2 Fridays ago, and then by this Friday, is your account below like 10% of your balance? If it is, then you are going to be considered living paycheck to paycheck, right? Though you probably are technically. The point is they send that to your lender. So if I'm a lender, what do you think that I'm going to do or use that information as? If you have a $10,000 credit limit and you asking for $20,000, and I see that you have the paycheck to paycheck indicator on your bank account, am I going to approve you for $20,000? Probably not. No, I'm not, right? So they are able to use this information. Mind you, this is why it bothers me too. This is why it bothers me, because number one, nobody, let me not make a yeah, I mean, I feel like this is pretty common. Nobody has all of their bank accounts hooked up to Plaid, right? And what I mean by that is, like, I can use myself for example. Plaid has a few of my bank accounts because I unknowingly just connected them in the past and just didn't really think much into it, right? But they don't have every single one of my bank accounts. So just because, let's just say I have one account that looks like I'm living paycheck to paycheck, but maybe that's just my bills account, right? But I have a whole nother bank account that I use for my day-to-day spending. And just because this account balance has okay, guys, I'm gonna hurry up. Just because this account balance is looking paycheck to paycheck, that doesn't mean that that's an accurate view of my financial life. You get what I'm saying? Like, it's just like that is not a accurate determining factor because you're looking at one account or two. You know what I'm saying? Like, to me, that's not fair. That's not fair. Um, and then unusual transactions or irregular deposits. What do you mean an unusual transaction or irregular deposit? Who are you to determine if it's an unusual transaction or irregular deposit in my bank account? You don't know what I have going on. You don't know the agreements that has resulted in that deposit coming into my account. How are you going to determine if it is unusual or irregular? Again, another thing that's just not fair. Because what happens if this contract has been in place for 2 years, but I'm just now getting paid for it because the job took 2 years? The point is they don't know all the details of that transaction. So for them to just say, "Oh, this is irregular, this is unusual," and mind you, anytime they flag that, your lending score goes down, so you're affected by it. Whole time it could be a lie. Or it could be partially true, but just not the full truth. It- Partial truth is still a lie. So it's just like that's also not fair. But I have to worry about this affecting my home purchase. Let's just say I'm buying a home now because of this account or plaid, this information that they're giving you that doesn't tell the full picture. Now I can't close on a home. That's crazy to me. Okay. So what should you do about it? Well, this is what I need everybody to do. Well, should I just wait to the end? I'll just say this. This is what y'all need to do. Go to my.plaid.com. I should have just did it in front of y'all. My.plaid.com. Let me make sure that's the one. Yes. I'm not sharing my screen. Hold on. And I need you guys to do this ASAP. No lie. Because it's getting scary out here. You got to protect yourself. All right. So go to my.plaid.com. And this is, if you don't know if you've ever used it, if you know you've used it, but you don't know what accounts it's connected to, go to my.plaid.com, plaid.com. And then, so once you log in, I'm not going to sign in because it shows my banks, but you'll have to sign up because, well, if you've never created an account for your Plaid portal, which I hadn't, even though I've used Plaid multiple times, I've never created an account in their portal. So when I went to this website, I had to sign up, and they'll ask you for, obviously like your information and stuff like that, to verify that it's you. Once you are past the verification, you are able to see all of the bank accounts that you have connected to Plaid. Not only that, you are able to disconnect any account that you want. Let me give you guys advice on what you should do. Go to my.plaid.com. No, I'm not saying fully disconnect everything from it and do not use it. That's not realistic. It does more harm than good. What the smarter thing to do, the wiser thing to do is to disconnect any bank account that has went negative, number one. And any bank account, if it has went into the negative, if you've overdrafted that bank account within the last 2 years, you need to disconnect that from Plaid because that's affecting your credit applications now. Number two, disconnect any account that you don't have deposits, regular deposits coming into your personal account. Like it's nothing but disconnect those accounts because they do not help you. They don't help your lending score. They don't help you. That's just for your business, your information. Plaid does not need access to that account. If this leaves you with no accounts connected to Plaid, I would advise you to create a new bank account, open a new bank account rather, and use that only one bank account for Plaid. Make sure that bank account never goes negative. Do you guys remember the video that I made maybe 2 months ago where I was talking about how to build credit from scratch? And just things that you need to do, prerequisite things that you need to do, and having a clean bank account was one of them. It's not only because of Plaid, but again, Plaid is just the name that we're using, but there are other APIs, right? The point being is you need to have one bank account that has never went negative, has never had an NSF fee, non-sufficient fee. And I keep saying went negative, but obviously you guys know I'm talking about overdraft. That's just how I've always referred to it. But yeah, overdrafted. For the banker in the comment who just corrected me, shout out to you. Yes, thank you. Yes, my.plaid.com. My.plaid.com. Disconnect any bank account that you have, again, that has went negative. Anytime you've had low balances, honestly, I would disconnect them. Let me share from that live. Hold on. Yes, I do recommend that you have at least one account connected to Plaid because, like I said, you don't get beat by the game. You have to just understand the game and become like you need to be a player in the game and you need to play the game or you will get played. Okay, so don't fully disconnect. That doesn't do you any justice. Okay, have an account there, but make sure it's an account that you purposely are ensuring that you keep at least $10. Remember what I had told you. I'm trying to pull it up. Here it go. Wait. Right here. I keep forgetting I'm not sharing my screen. I'm right here. I ain't even sharing my screen. Hold on. And we went over this extensively in a how to build credit from scratch live. So the banking foundation that's required now. So not only is check systems and all of those other secondary consumer accounts giving this information out, Plaid is just the newest one, right? Because they've been doing this, but they've been telling us, and they ain't been telling us, child. They've been telling the lenders, but I've been watching, so they've been telling us because I'm gonna tell y'all every time. They've been showing us that this is the direction that they were headed in, which is why I told you guys a few months ago, you need to have at least one checking account and one savings account under your legal name that has 0 overdrafts, 0 return payments for at least 12 months. You need to make sure that you have a savings account with at least $20 in there. Do not remove that $20 out of there. We have like I told you guys in that video. Now is not the time to think that you're going to just willy-nilly YOLO life in your banking and your financial life and think that banks are going to be as forgiving as they have, because they're not, friend. They're not. So honestly, you have to take charge. And what taking charge means is you need to have a savings, at least one savings and at least one savings and at least one checking account that has never overdrafted. So if all of your bank accounts right now has overdrafted, open another one. You don't got to close those, but you need to have at least one clean bank account. I told you guys that EWS and check systems seen a surge last year. Last year, they seen a 60% surge. So that told us one thing. Banking information matters way more than it ever has. Our banking information, I can't even talk. Our banking information matters way more than it ever has. Okay? Now, check systems and early warning system, they don't assign they don't assign a score like plaid, but they still give the information, you know. The only difference is plaid just gives more because they're in your bank account. Like they're seeing the transactions, they're seeing the deposits, they seeing it all. Okay. So making sure that you have at least one checking and one savings under your legal name, no overdrafts, no return payments, none of those fees, none of that. It literally has to be clean. Again, in your savings account, you need to maintain a balance of at least $20. I don't care if you only have $22 left and you need to eat some noodles with the $2, but leave that 20. Do not go under 20 in a savings account because soon as you do, it's going to affect you for the next 2 years. It's not worth it. Eat some noodles. Eat some freaking noodles. Like you don't gotta get we've becoming a way too bougie when it comes to our financial lives, and we are w- no, we are justifying just poor financial behavior. I'm not gonna lie, like we really are justifying way too much nowadays. And yeah, we could be mad at the lenders for doing this and digging into our financial lives more and all of that, but also we need to take responsibility, take accountability, and just do better. Like we don't need to harp on it. We don't need to feel bad. You don't need to feel bad about it. None of that matters because none of that is going to change it. However, you can take charge and going forward, do better. Do better. Right? So know if you have $25 left, do you have $25? No, you have five. Period. We can't make excuses anymore, and I can't even coddle you guys when it comes to that. It just is what it is. Keep $20 in your savings account, okay? Keep at least five, or I'm sorry, not keep at least. In your checking account, though, specifically, you need to make sure that you're depositing at least $5 every month, okay? Making sure that you are putting at least $5 in your checking account every month. Why? Well, because these indicators that I keep, discussing, these are the things that looks good on your banking reports. Clean banking signals versus bad banking signals, right? Clean banking signals are if you have a regular deposit. Regular deposits is anything over $5 that happens on a regular basis. Okay, in a regular increment. That's just a cheat code for credit cards, and it's going to be more apparent next year. I'm telling you guys, at least $5. You gotta sacrifice at least $5 a month. I'm sure you spend $5 doing a plethora of other things, right? You can afford to put $5 in your checking account every month. You can, right? Um, Yeah. So that'll and you can use that same account connected to Plaid so that you're good when it comes to a banking report. Because let me tell you how it's going to happen in the future. Like I said, now not only are they getting more information because of FICO 10T on your credit report, but they're also getting your bank account information. You need to be clean in both areas. The only way you're going to be clean is if you specifically make sure that you are setting up a bank account or using a bank account just for that reason. Listen, the cheat code to life financially is always to make sure that you look good on paper. Nobody cares how much money you make as an entrepreneur. Nobody cares, or even just a 9 to 5 worker. The point is, nobody cares about how much money you make if it does not show on paper. Okay, making money is not impressive to banks. They have more money than you. They got more money than us, right? They don't care about that. They do care about the signals and the story that your credit report and also your financial behavior is telling. And it needs to tell a positive story or it just will cost you. It will cost you, right? So in 2026, starting now, but like just going forward in 2026, and I told you guys this is a 4-part series. So today is kind of just to bring a few things to your attention. And number one, Plaid was like the biggest thing. Disconnect the bad accounts ASAP. Honestly, there should only be one account connected to Plaid. Just for transparency, I literally had 6 accounts connected and didn't realize. Didn't even realize I had that many accounts. I had like Rocket Money, and I mean it was just so many random like apps and stuff that I had connected, didn't realize, right? I disconnected all but one. I think you should only connect one Plaid. So anytime you see that Plaid pop up, use one account. Use one account. As a banker, this is something that I've seen an increase of as well. So glad you're talking about it. Wish I had a platform to talk about it. Shout out to you. Shout out to you, Sandy. But yeah, you heard what she just said. Our banking foundation is just becoming way more important, right? Way more important. What was I about to say? All right. Back to the I'm sorry. I thought you guys was looking at my screen that whole time and y'all wasn't. That sucks. I'm sorry. I thought I was sharing my screen that whole time. Well, let me share it real quick just so you can screenshot it. But I talked about this extensively in the other video, but just so you guys can screenshot it, I will pull it up. Dang it. Just screenshot that real quick, the banking foundation. If you have Chase, you can disconnect your account also through the app. Yeah, some banking apps, yeah, will allow you to do it. But you could just go online and do them all together in one. But yes, Chase does allow you to do that. I'm on YouTube. Y'all ain't gonna be able to see it. You gotta come on YouTube to see the screen. Oh, I'm in the way. Chow, chow, chow. All right. And then so the next thing I want to talk about. Oh, Jesus. They're just all in our business now, y'all. All right. So here's the next big change when it comes to our credit report. The next biggest change. What is that? Child, they done got us on the buy now, pay later. Now, if you're in Credit Academy, we've discussed this. But buy now, pay later accounts are now going to be reported on our credit report. Now, for anybody who is tempted to say things like, well, they've already been on our report, or I've already seen a firm or whatever on my credit report, so this is not new. Well, yes, no, you're not wrong. So a firm, specific companies have already been reporting, especially if you utilize the option to pay in more than 4 increments, then it's a loan. So it was on your credit report. But this change that I'm referring to is referring to the 4 increment payments. You know how, let's say you on footlocker.com or wherever the case, and it says you want to pay in 4 payments with Klarna, with Afterpay, what are some more? Klarna, Afterpay, Affirm, PayPal even does it. Shoot, Apple Pay even does the pay in 4 now. So for the first time, and this is big news, because again, this is a change. This is not normal. This is not the same thing as what was reporting. This is something that has been amended within the FICO 10T suite. Yes. Yes. So they're now reporting on our credit report, even the 4 and 1 payments. And why is that important? And what do you need to know about it? Well, it does count towards our credit score. It counts towards our credit score. And because of that, you need to be aware of like how these things look. So buy now, pay later accounts is obviously those again, pay in 4 or installment accounts. It is not a bad thing if you use those, right? So just because you've used it a few times, does that mean that your credit score is just going to decrease or whatever the case? No, that's not what I'm saying. But what I am saying is, specifically with mortgages, it will affect your mortgage score. Why? Because mortgage scores going forward are going to be based on FICO 10T. It's no longer going to be based on what we consider the mortgage scores, which are FICO 2, 4, and 5. Those are scores that unveiled in like 96 or something like that. No, they're now using FICO 10T specifically for mortgages starting this year, starting at the end of this year. So basically, it's going to, whenever they make a change, it takes a while to kind of fully implement. Next year will be like when we really start to be affected by it. Okay. So prepare now. Prepare now. Anyways, your buy now, pay later repayment history is going to influence your application. So are you paying those people back? If you say you're paying in 4 payments, do you pay on time? If the payment has been declined, let's say they tried to get the draft your payment and it was declined, that's going to look bad on you. That's going to be reported. Also, if you have too many, this is going to hurt you. Why? Because then it just alerts your lenders that you perhaps may be going through financial distress. Why are you? Because they're looking at it, and this is not me talking, this is the lenders. If I'm a lender, I'm going to look at, why are you financing a $400 payment? Or it's not even the amount. Why are there so many mini loans, is what they call them, mini loans? Why do you have so many mini loans out? Are you going through a financial distress? Should we worry about you perhaps not being able to pay us back? Because if you're taking out all of these loans, like sometimes even on like $100, studies show, by the way, there's another thing that I should have brought up. They did a study. Do I have this put up? A study, or I'm sorry, yeah, a study on these accounts. And what they found is the average loan that's outstanding was literally $150. $150. So just to kind of give you some context, prior to these accounts now being accepted and reported on our credit reports, a loan was not even considered a loan unless it was $500. Literally, a loan had to be above $500 to even qualify to report on our credit reports before this. Just to give you context, right? And so now, if you have, let's just say you have about four, you have two affirms out, maybe two afterpays, and perhaps two Klarnas, right? You got about 6 accounts outstanding. The average is like $150. That looks extremely risky to lenders because there is no world that exists in which a lender would see that you have six $100 loans out, for example, and not think that there is something going on financially, or perhaps you're overextended, especially if you're missing payments on them, right? And they will look back up to 24 months, guys. So all of the buy now pay later accounts that you've had over the course of 24 months, they're able to now see. So you need to keep an account of all of the buy now pay later accounts that you have, and be a little more picky when it comes to using it. I'm not gonna say, hey, you shouldn't use it. I understand times it's hard right now. Like, I get it, right? And lenders get it too. So no, I'm not saying you never should use it. However, you should be more specific and picky about what you use it on. Not every purchase should you use it. And if you don't have to use it, just don't use it. Listen, and let me tell you why I'm saying that last line, because I am also guilty of, let me tell you, sometimes I'll just be shopping. I have no plans on using a firm, or I'm sorry, or of using like Klarna, right? But I get to check out sometimes, and I'm not gonna lie, I'll be like, you know what? I'll pay them they little $72 today, and then in the next 2 weeks, I'll pay the other 72 instead of just paying like the full $500 right now. I don't even be having a rhyme or reason sometimes to do it, but I just do it because number one, I knew that it didn't affect my credit, and it just, I don't know, I just didn't put too much thought into it, and that was irresponsible of me, honestly. But I would be a lie if I sat before you and told you that, oh, I have never used it. No, I've certainly used them and didn't always have a reason to, right? But when I saw that they have approved it to be on our credit reports, it certainly made me stop to stop using it in general. But also, like, if I do use it, it has to make sense. Like it has to make sense. You too? Yeah, like I'll just use it sometimes. I don't have a reason why. Had fully planned on paying it in full. But because I saw the option, because I knew it was just like a low risk, it just was like they wasn't charging interest. So it's honestly, let me give you this little $50 today, and then in 2 weeks I'll give you the other 50. It's just like no reason, but I've used it, right? And so if you are like me and do that and have done that, we can't do that anymore. We can't do that anymore. Yeah. You can still use them occasionally, but again, just make it make sense. Just make it make sense. You don't want to look like you're in financial distress. And quiet as it's kept, this year was like the year of the least amount of borrowing, right? And that's just because a lot of people were already like in a lot of credit card debt, and the interest rates were high and all of that, right? So what and this is this is my opinion. I want to be clear, child. I gotta be careful what I be saying. This is my opinion. Last time this happened, or every time this has happened, when we have like a low year of borrowing, the next year is so much because banks still have that budget, right? And so typically what happens after a year like this year, next year you're going to see a lot more credit limit increases, a lot. Not only in volume, but also in the amount that you're approved for. Like, we can fully expect that. It's happened 4 times since I've been an adult. So I mean, and it goes back further, but I'm just saying, like, personally, I've experienced it, and also when you study just the trends of borrowing and lending, this has always happened. Every time we have a year, it's typically kind of like evens out at about 18 months, and then after that, it definitely turns around, because number one, you have to think lenders are, the less money that they lend out, the less money that they make. Period. They so they're not in the business of keeping all of the money that they have. No, they want to increase their money. And so I just believe that next year, if you take hold right now and truly, like, again, just implement these small changes, these small things that maybe doesn't seem to be making a difference or haven't made a difference in the past, but will absolutely make a difference going forward. If you implement these small changes, you will benefit next year. Mark my words. That's all I'm gonna say. Mark my words. Mark my words. You'll benefit. You'll benefit. So keep in mind, you don't have to stop using buy now, pay later. You just have to be more responsible with them. That's honestly just the whole point. Being more aware of what you are doing on a month-to-month basis, or even on a day-to-day basis. Just these mindless things that we typically just sort of put no thought into. Yeah, we got to think about it now, friend. We have to think about it. And then what's the last thing I wanted to tell you guys? All right. So those are the main points that I wanted to discuss today. FICO 10T, it's here, it's already deployed. Next year, we will absolutely, it just will become like a household name, right? Nemesis next year, FICO 10T. So prepare for that, meaning right now, your utilization that you're reporting is going to affect you for the next 2 years. So do your damnedest, do your best to identify your statement date for all of your credit cards and reduce your balance to under 10% by your statement date every month. If you do that, you will be good. You will be good. You'll be good no matter what your score is. Honestly, even if you have a 600 credit score right now and you start to implement these changes, you're going to benefit more than people with a 700 credit score who have not done this. It's that deep, because that's how much FICO 10T, that's how much our credit card utilization specifically matter to FICO 10T. Then number two, now you guys know about banks monitoring our cash flow and selling it to our lenders. Get your clean bank account and disconnect all of the other bank accounts from Plaid, even if you haven't overdrafted. They should only have access to one account. Keep in mind, every account that they are connected to, it just gives them more information in order for your score, your lending score that they're giving to banks, to be affected. Less information is possible. Okay. Yeah, 2 years, 24 months. Yep. Can I re-show the slides? Yeah. Buy now, pay later is now on our credit reports. So just be aware. And let me put a period on just those points. Here's just the final thing. You have, from today, you have 12 months, and this is per experts review. This is not even my personal opinion, but I also back this as well. Like, again, the patterns tell a story, and the story that it tells is you have 12 months from this month, November. 12 months. So by November 2026, to either adapt to these changes, or you will be left behind even with a 700 credit score. I know. Even if you've been working hard on your credit for 7 years, right? Or whatever, however much. Even if you've been working hard on your credit report for years at this point, and you do not adapt to these small changes that you don't believe make a difference, you will be left behind by November of next year. And this is per expert review. Right? You'll be left behind. So either get left behind or get ahead now. Like, so don't think it's all doom and gloom and you've messed up or whatever the case, and it's done. No. There's an opportunity here for you to either adapt or get left behind. So that's why I was saying, like, there's no point in soaking, there's no point in feeling bad about it. There's no point of woe is me. There's no point in it. Like, literally, there's no time for that, and there's no point. Because you still have an opportunity, even people with the worst credit scores, even if you have collections, charge-offs, and all of that, you still have the opportunity to get ahead. Because that's another good thing about FICO 10T. So I talked about like the negative things, I guess, today, but there's also opportunity. People within credit profiles, now you will be able to benefit from your credit without having to build an extensive credit profile. You could just do the basics, the bare minimum, right? And we talked about what is considered the bare minimum. with credit. Yeah, y'all need me to show y'all that slide real quick, go over those real quick, or we are, I mean, because I did like a 4-hour live on just that topic specifically. But if y'all need me to just hurry up and tell you guys what the minimal amount of credit that you need, I will. Yeah, okay. All right, let me get it just real quick, just so you guys can screenshot it. And I definitely would recommend that you guys go watch the video, because obviously I give way more information and it's just way detailed, and it just leaves no guess room. It takes all of the guesswork out of building your credit. I'm trying to pull up the screen so you guys can screenshot it real quick. Yes, the video is how to build credit without the guesswork. A step-by-step guide to building credit is what it's specifically called. All right, let me share my screen. And this is available in the Credit Academy community as well. All right, let me make sure I'm sharing it. Oh, let me get out y'all way. I'll make it bigger too, because I know it's small. All right, the builder's profile, just the basic qualifications that anybody need. I don't care what your credit score is. Don't care how many derogatory accounts you have. You need to have this at minimum if you want good credit. Period. Number one, you need to have a banking foundation. We already talked about that, meaning you need to have at least one open checking account and one savings account. All right, that doesn't have any overdrafts or anything. And then you need to have your credit card base, which is you need to have at least 2 credit cards. You need to have at least 2 credit cards, and I'm not talking about store cards or specialty cards. I'm talking about just regular credit cards, and it just has to be at least $200 for the limit. So 2 credit cards with at least $200 on them. It doesn't matter what bank, doesn't matter. None of that matters. Okay. This is just your bare minimum, right? Do not be late on your credit cards, obviously, but also you need to work on consistently reporting your utilization under 10% of that credit card. So if you have a $200 credit card, do not carry over $20. So even if you max out your credit card before that billing cycle ends, make sure that your balance is below $20 on your credit card. Okay? Honestly, if you have two $200 credit cards, they're super easy to manage and get the most out of your credit cards, because it's really no guesswork. It's making sure that you're not carrying over more than $20. That's it. That like genuinely, that's it. And when I say carrying over, I'm referring to your statement date. And remember, your credit profile does not consider anything consistent until you've done it for at least 6 months. Okay? So you need at least 6 months. I mean, I advise you to just do it always, but at least 6 months, and then you'll start to look consistent in the eyes of lenders. And then on top of those 2 credit cards, you need 1 short-term loan and 1 long-term loan. So this is just 4 accounts so far. 2 credit cards with at least $200, 1 short-term loan, which is any loan under 36 months. It could be a personal loan, it could be a self-lender loan, it can be a firm loan. It just has to, it just needs to be under 36 months. Do not end that installment early. You need to pay it on time. You need to have this account for at least 24 months, right? But you need to make sure that you pay it on time. So don't pay it off early. Don't think you're getting ahead, paying it off early and doing yourself a service. You're not. You have to use this short-term loan, to build credit, to report monthly to all 3 credit bureaus. That's the only qualifier. Make sure that they report to all 3 credit bureaus. Most companies do nowadays, but the smaller companies don't. To take the guesswork out, your bank typically will offer some sort of credit builder loan, and those are fancy words for a short-term installment, short-term loan. Or if you don't have a relationship with your bank, or your bank doesn't offer it, literally self-lender does. I think their website is like self.inc. Self.inc. I have an affiliate code with them, but I don't know it right now. So child, at this point, just go to self.inc. Okay. Start there. You can get the lowest one that they have. I think the lowest one is like 24 months for maybe like $25 a month or something like that. And then the good thing about that I like about the self is at the end of the term, at the end of the 2 years, they'll give you your money back. So it's like you're paying into a savings account, and they're reporting that payment to the credit bureaus, and it looks like a loan on your credit report, but you get the money back. Okay. So have at least one short-term loan and one long-term loan. If you already have student loans on your credit report, you already have a short-term or you already have a long-term loan. If you have a car payment, if you finance the car or furniture or anything like that, you already have a long-term loan. So you don't need to get another one. But my only rule for the long-term loan is you need to have at least a 11-to-1 payment ratio, meaning for every late payment you've had on that account, I need you to have 11 on-time payments to cancel out that late payment. So if you have a long-term loan already, but you have buku late payments where it far surpasses my 11-to-1 rule, get another one. Within reason. Obviously, a long-term installment is a long-term investment. So I'm not saying just go out and get a car. Like, no, no, relax. No, 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 no. You don't have to. But if you want to get the most out of your credit profile and your credit score, this will be of service to you. So again, you only need 4 accounts to get a 700 credit score. I tell y'all that all the time. I go into full detail in that video that I'm referring to, but you only need 4 accounts and about $600 to get a 700 credit score over time. You don't even need it. You don't even need it right up front. It's just that easy in a banking account, in a savings account, and in a checking account. Like I said. All right. So then after you get that base level, the 2 credit cards and the 2 loans, one short term and one long term, do not apply for anything for at least 6 months. That's called aging or gardening, allowing your credit profile to age 6 months with no new inquiries or no new accounts. That's important because a lot of people will start to build credit, get approved for things, and then they never go 6 months without any applications. That's so vital, guys. It literally takes you out of the intermediate lane, the beginner lane, to seasoned. Your profile never seasons if it never goes 6 months without any new applications or any new accounts. Even if you have a 750 credit score, guys, that's so important. Every year I go 6 months with no applications. I have above an 800 credit score and I still do this. Every year I go 6 months without any applications. There's a 6-month period that I don't care what card or anything comes out. I'm going to wait until my next open period. And I'm intentional about it because it absolutely makes a difference. I've witnessed it make a difference. It makes a difference. You need to go at least 6 months, no applications, no new accounts. Allow your credit report to season, okay? Um it's just that simple. We make it way harder than it has to be. Genuinely, we do. And we think that we need all these accounts and the $1,500 credit limits. No, no, no. You do not need that. It's cool to have them, right? Like it's cool to have available credit when you need it. But if you ever want to get to the point where you can get available credit get 20,000, 30,000, 40, 50, 60, and above, where that's just a normal credit line, because that's not novel in any way. The banks have way more money than that to give you. I'm just letting you know, on a business side and a personal side. From a personal experience, they have way more money to give you. $40,000 credit line is nothing to banks, but it is something based on your credit profile. It does not qualify for it, right? So if you do want to get there to where that's normal, to where your credit profile can start working for you, right? Like I tell you guys all the time, I got into angel investing based on my credit in the beginning. And angel investing has put me in just a whole different tax bracket. But the point is, I wouldn't have been able to afford any of that if I didn't have good credit at the time. Because at that time I was making 30,000, 40,000, I think, or something like that a year. 45,000 in my career at the time. I was making 45,000. So I didn't have any extra money for real to invest. But I had, and I'm not advising this, but I ended up taking out a loan, using my credit at a very minimal rate, and use that to make an investment. I am not telling you to do that. I want to be clear. I'm not, because that wasn't wise, honestly, but it did make it possible for me to do it, right? The point being is, like, your credit can work for you if you build it right. But if you still borrowing and you're borrowing at these high rates and your interest is sky high and it's piling up, you're never going to get ahead. Your credit will never work for you, and you'll always work for your credit. You guys also know I don't pay for flights ever. I don't pay a penny for flights. Why? I use my credit points. Use my credit points, and you can too. I don't do anything special. My Amex Gold gives me four points per dollar. Jesus, 4 points per dollar that I spend on groceries, food, all of that. And just because of my day-to-day spending with that card, and also Citi, and now like the Venture X as well, I use points to fly all the time. for the last 3-4 years. I have not paid a penny towards a flight, even flying family members out or whatever the case. On paper flights. Why? Because my credit card awards me for just spending, doing my regular spending. I'm not a person that just does all this luxury shop. Heck no, I'm actually very frugal, very cheap. Will always be. But I still am able to amass the amount of points that I need in order to fly for free. And you can too. You can too, literally. What else was I about to say? So we are in a spot where we have a unique opportunity, irregardless of what's on your credit profile, right? Like again, irregardless of the collections and charge-offs, yes, you can work on those, right? And we'll discuss that in the third week for this, right? We'll discuss the derogatory accounts. But right now we're talking about only the positive accounts and only the things that's not on your credit report, because those are the things that's going to matter. Like again, your banking record, okay? Your behavior in terms of these accounts. What time is it? Okay, I gotta end this soon because I gotta go get my daughter. But let me take a few questions really quick. I need high limits and low rates. That to me, that's the whole point of credit. If you cannot get high limits and low rates, what's the point of having credit? I can just use my debit card, truly, you know? So, but that's the whole point. And I'm glad that that's your goal, because that's what it should be when it comes to credit. We should all want to borrow at the lowest rate possible. If I get a new car, I don't want to pay above 2%, 3% in interest. No, absolutely not. When I get a home, obviously the Fed rates dictate like your home rate. But the point is, if I refinance, or if I want to purchase another home, if I want to purchase a commercial property, I want to get the lowest rate possible, right? That's the whole point. And no, I'm not opening no credit card if you're not at this point. I ain't gonna tell y'all my number now. At this point, I won't even entertain below a certain limit. I won't even entertain it, because what's the point? If this company will give me that without a blink of an eye, why on earth would I allow you, like open up a line of credit with you, and you're playing in my face, giving me a 20K trade line? Like, no, I'm fine. American Express will give me that tomorrow, right? Like, it's just like these companies think that 10K is impressive because not even think, they know it's impressive to most people, because most people don't understand what borrowing power is. They don't understand borrowing power. They don't understand what real funding is. They don't understand that, let's say you're in business, you're opening a business or whatever the case, and you need a 6-figure loan. Let's just say, right? Like you wanted to, I don't know, let's just think of a business. I'll give you a real example. I'm wanting to open a salon suite with a friend, and the investment was over 6 figures. I don't want to use my capital that I have available now in order to make this investment. Why? Because this is a long-term investment and it's not going to come back immediately. So that cash that I use is not going to be available if I invest it all. However, I can take out a loan at a very low rate to invest in that, and it pays for itself and also still pays me, right? So it's like, that's the name of the game. That's how you get ahead. You can't get ahead nowadays just saving, unfortunately. You'll never be rich with saving. You'll be comfortable, but you won't be rich. Savings can't make you rich, but savings can make you a little money if we talk about high yield savings account, and we'll talk about that actually. I think that's next week. We're going to talk about that, because everybody, by the time this year ends, everybody going to open a high yield savings account. We all going to have a high yield savings account. I'll tell you guys which ones that I prefer, that I like. I'll even show you guys how much money that I've made just on high yield savings account. Just literally my money just sitting there. It was sitting in a regular savings account at first. I tell you guys, I've told you guys the story, my awakening moment when it came to savings, like and how ignorant I was financially. Like when I first started making money, I had no idea the rules of finances. I had no idea. I was so blue. I was so green to anything. I did not know. I didn't come from money. Nobody in my, like I did not know. And so I was that person who had so much money in a regular savings account, wasn't investing, wasn't doing anything with my money. It was just sitting there because I was scared. I was just like, I don't want to invest it. I don't want to lose it. I'm not used to this. What happens if I go broke tomorrow? Like just that poverty mindset, right? Like I was stuck deep. I was in the trenches with that, making all this money, but still mentally in the trenches, just mentally in poverty. And that affected so much in my life at the time. And I didn't know until a lady at my local bank, literally, I will never forget this woman. Cause she's the reason why I started investing. I was going through the drive-through and she made me come in the bank. Like she was like one of those older, like auntie, like grandma type of black ladies that's just, you trust her. Like, you know how you could just, those people that's just so, just you just feel it. Their spirit is just so just comforting. So it's like I trusted whatever she said. It's like I did not question it. And typically I would like question certain things, but I didn't question it with her. And she just was telling me like, baby, like this is not wise, and this is what you should do, and da da da. She was the first person that opened my eyes to it. And after that, it's just my life has changed. My financial life completely shifted after I started doing right with money instead of just like hoarding it, honestly. But we'll talk about investing in savings next time, okay? Yep, retirement accounts. I have my opinion on a lot of that, like the common advice that's given. But yeah, we definitely can talk about that. Um, yeah, the salon suite, just an investment. I don't do hair. I don't do hair, but like salon suites are, I ain't made no money off of it yet. So let me not just say like they're so profitable. I haven't made money off of it yet, but the investment is like new. So what you talking about, Bree? Who? The bank? Is there going to be a course on rebuilding your credit profile with FICO 10T? So it do y'all want a course? I mean, I can put together a course, but I was going to do just like give you guys a guide to do, just a step by step. But I don't know. I don't mind doing it. I mean, it's easy to put together the course. I have all the information, but I was sort of like preparing a workbook. But I guess I could do both. I am not in life insurance. I have life insurance, but I am not like an agent or anything. But you know what? I do. I can bring my agent though. That would be good. That would be good because that's also important. I don't sell anything on TikTok, Bree. Who's selling something on TikTok? You talking about in TikTok Shop? I don't have anything on TikTok Shop, but I do have a lot of fake pages. Don't tell me. Do not tell me that they are selling something on TikTok under my name. I bought your kit on TikTok. I don't have any. Like I literally don't sell not a thing on TikTok. Please don't tell me that, child. Someone definitely are selling. Okay. I gotta look at it's not me, y'all. It's not me. I don't sell anything on TikTok. If I do, I don't even know how to. I don't think you sell digital things on TikTok. But for Credit Academy, you guys obviously will get the guide and stuff for free. No, Bree, that's not me. Oh my, can you email it to me so I can see like what page and stuff like that so I can get them taken down? No, I don't sell anything on TikTok. That is insane. TikTok just be approving anybody to sell anything under people's name. That's crazy. High yield savings is next week. Oh my goodness. That makes me so mad. I'm actually switching over my website right now. My what you call it? Domain, and it's like freaking so y'all, I'm so horrible with tech. Let me tell you what I did. I'm so slow because I finally was able to get my name domain because somebody had it tied up for the last like 4 years, but I finally was able to get it. And child, I thought switching your domain, so my store that was like on road to 750.net, I switched the domain over to shondamartin.com, but I didn't know it was like a process. Like I can't even explain it because the terms I genuinely I don't be knowing what the heck I'm doing when it comes to technology. But whatever I did made it to where my old website no longer works. And then my new website is not connected. So like my store is pretty much offline right now. I actually have a meeting tomorrow to fix it. What time is it? Okay. I have a meeting tomorrow to fix it because I did some stuff. I don't know what I did. I do know that I like switched the domain, but it's nowhere. So I messed up. So literally this entire week my website has been out of service. But what I will do though, what I will do, um, I'll I don't know how I'm gonna do it actually. You know what? tell you guys when it's available because child, I don't know what I did. I just know I messed it up. You have a ghost domain now because you're supposed to approve it. But see, that's what I'm saying. I didn't know. I literally thought it was just as simple as rerouting or redirecting, child. So I didn't mess up some things, and we're fixing it. Okay, I didn't messed up. GoDaddy offers help for free. Oh, they do. See, I didn't purchase my domain through GoDaddy. Yeah, yes, all of that language, what all of that. Have ChatGPT help you. You know what? That's honestly a good idea. I should have. Did you publish the new website? Listen, look, this is somber. I'm gonna cut this out. But if you go to shaunamartin.com, there's like a template on there of like strangers because what I did, what I did was like, so I chose a template and I was gonna like plug in my information, my pictures, and all of that. And I did, and I thought it auto saved, but like for whatever reason it didn't. So the website essentially that I created just it disappeared, and I had spent like 4 hours on it. So I just was frustrated and haven't done it again this week. So now literally all it shows is the template, but just don't even go to the website because it's actually very embarrassing. It's very. If you go to shaunamartin.com, it's so stupid. Actually, let me show you. At this point, we here now. We're already in like I don't know what the heck. Y'all look what I did. So this is my website right now. Mm-hmm. Mm. Yeah, it just shows a template, and I had spent 4 hours designing my web page and all of that. I had even put articles and stuff like that on here, but I didn't save it. And I'm using WordPress. Who told me? Who told me to play around in WordPress? It will always be a regret. But child, I was using WordPress, and y'all know WordPress, like it's too many options. My last website was made on Wix, and it was just a plug and play. WordPress, they be wanting too much. It's too much. It's too many options. I have a headache. Okay. So I just haven't had 4 hours to fix it. So as of right now, this is how it looks. And yeah, pray for me because I just need to get it fixed before tomorrow or I have a meeting tomorrow. So hopefully I can get it fixed. So yeah, we offline right now. But I am still available in Credit Academy. So make sure if you're not in Credit Academy, join Credit Academy. Yeah, if you go to member.road750.net, join Credit Academy. The link will be in the description. We have a free community as well as a upgraded community VIP. We will start our monthly member calls actually in a minute. My birthday is November 16th. I think the first monthly member call is the 19th. It'll be on the calendar in Credit Academy by tomorrow. We'll do our monthly member calls and all of that. But yeah, I have to go. I have to go get my daughter. But yes, so this was part 1 of 4 of preparing for 2016. Please remember what I said in terms of your buy now pay later accounts, your bank account. That's the most important thing. Honestly, that's the most important takeaway is the bank account. The bank account thing. Get a clean bank account, guys. I cannot advise you enough of that. Get a clean banking account. But like don't wait until next year. Go to capitalone.com. You can open up a bank account online. Multiple banks. You're able to open up a bank account online. You need a national clean bank account. Show it again. You need a national clean bank account, guys. If you just have a credit union, I love credit unions and they're fine, but you need a national one as well. You need a national one. Okay. So rewatch this if you came in the middle. If you need to learn how to build credit, watch my video on YouTube. It's called How to Build Credit, a step-by-step guide on building credit with no guesswork. It's like a 2-hour live, and we go into full detail of everything that you need to do, every account that you need to get. I give you options for every credit level. So there's no, I can't get a credit card, I can't get approved, all of that. No. There is an option, a credit card option for every credit profile. There's no such thing as a credit profile that does not qualify for a credit card. So even if you've been getting denied and all of that, you're just applying for the wrong credit cards that your profile doesn't qualify you for. You just need to apply for the right one. So there's an option for every level. I'm not affiliated with any of the companies or anything that we talked about. So like you don't have to worry about me just like peddling a product. I'm not affiliated with any of them. I don't make any money off of them. But it is important that you know how to build credit, okay? You scared of nationals? You need to have a big bang, Latasha. But just use that as your public bank, like your plaid bank, you know? Keep your little savings, your $20 in there, put $5 in your check-ins every month, you good. You good. Is Chime considered a legit bank account? It is considered a legit bank account, but I would advise you to also get a traditional bank account as well. It's legit, but it's not traditional, right? And so some institutions won't accept them yet. So just also in addition to that, get another one. Capital One also does check second chance accounts too. So if you are in EWS, early warning systems or check systems, if you have a bad banking record, Capital One does second chance accounts. Okay. All right. So let me show you guys the video one last time, or what video to watch, and then I gotta go get her at 3. Got about 6 minutes. All right. Let me show you. Right here. Share my screen. All right, so if you go on my YouTube channel, Shonda Martin, and you go to the live video tab, if you go right here, it says, I don't want it to play, but I think it will. Okay. All right, this video, it says a complete guide. Why do I keep doing that? Okay. One more again. All right, so go to my YouTube channel, Shonda Martin, and then go under live videos. It's the third video. It is a complete guide to building credit without the guesswork or gimmicks. It is a full step-by-step process. It's 2 hours long, but just get your notebook and just dedicate 2 hours to it. And I guarantee you're going to walk away understanding fully how to build credit, not only how, but like what accounts you need to get, what's missing on your credit profile, all of that. Like it's no guesswork, okay? Highly advise you guys to watch that video. All right. I have to get out of here, and I will see you guys on part 2, which is next week. At the same time. Y'all like this time? I like this time. I like this time. Yeah. All right. So I love you guys. I have to go. God bless you guys. And yeah, I will talk to you later. All right. Bye-bye. Bye-bye.